Set from Forex Trading Unlocked, and we are here on January the 15th, 2020 with a Forex market daily analysis for you. We're going to take a look at the major currency crosses and see how they're shaping up today. Before we do that, though, we just want to reach out to our disclaimer page real quick to remind you that this webinar is for illustrative purposes only. And now we will get into the meat and potatoes of what's going on. So we are here at the Forex-Trading-Unlocked.com website, and we have the workstation page already pulled up from our menu, and let's see what's going on here for the numbers. We had a bunch of oil numbers that came out today, which definitely helped oil get a nice little slide again. This is good for all of us at the game. We have most of the numbers are out for today. Tomorrow we have a bunch of numbers that will be impacting Germany and the EU, as well as the euro dollar. So we'll see how that goes with the euro US dollar. We also have some US numbers that are coming out tomorrow. Initial jobless claims, a normal Thursday number. But we also have excuse me, import prices, Philly Fed, retail gas, retail sales, and a bunch of other, those are all economic numbers that will probably influence the bond market a little bit, and if they do get a little shake up there, then you'll probably see a little spark with the US dollar index as well. And then we have on Friday, let's see, we retail sales in the UK, we have some EU numbers, and then we have the housing starts, building permits for the US. So yeah, we definitely have some interest rate numbers, not so much currency numbers, unless they're only really currency numbers if the interest rates get shaken up by it. All right, so first we're starting out with the US dollar Canada here. Very tight trade going on today. It's been going sideways for a couple of here. Remember, we have the US-China trade deal. This kind of does have a little bit of a bearing on the US Canadian dollar. Not as much as the US dollar, obviously, but it does have a little bit to do with it. But the trend overall is bearish. So we have this last swing high. This is our directional pivot at $1.3103. Trading above that gives us a reason to push this correction higher. Right now, remember, this is an overall creeping lower bearish trend here, and especially over since November, it's been trading lower. So right now, we want to view this current rally that's in place as a corrective move. So the question is right now, is this little area now where it's at, is this basing, or is this getting ready to fall back on the lows? Dollar index has been under pressure, so we're going to go with the dollar index and think that as long as the trend is your friend, we probably have just made a lower move high. That's what it is currently. So unless we breach this level and come back into rally mode, then we have to say that, well, this is a corrective mode for the most part, and now we're looking for a slide. So the market is lower today. We'll see how it settles this afternoon, and then see what goes on into Thursday and Friday. So not really any Canadian numbers coming out. All the numbers that we looked at are for Europe and for the US. So probably going to be a sideways to lower trade right now is the outlook for the US dollar Canada. Now we're going to look at the Australian dollar, US dollar. We had the first phase of the China US trade deal going on today. This is positive for Australia, and it's also positive for the Australian dollar. So this last swing low here was a higher move low, okay? So that is as fundamental as it gets as far as maintaining the bullish posture. So the trend is not very steep. So for the Australian dollar, US dollar to resume its uptrend and get the bulls in motion again is the most likely forecast for the not too distant future, especially as we get through the aftermath of this first phase of the trade deal between the US and China. So very beneficial. So this pivot right here, the last swing low at 68.49, this will be our up and down directional pivot. Above here, we look to buy breaks and are bullish, looking for a challenge of this last swing high up here at 70.32. Going to take a little while to probably get there, though. So we're looking at a trade that's going to probably take a good week and a half to 2 weeks to unfold, should the bullish trend reemerge. Now we're going to look at the New Zealand dollar, US dollar. This market has been a bull for quite some time against the dollar. However, as you it's in a corrective phase right here. Now this had a very strong velocity of momentum going to the upside. The bulls were really just pressing this rally in the month of December going into the first of the year. So for the market to come back like it is and even press into this lower area, this is where we're looking. Only below the 65.21 area do we really get bearish to New Zealand dollar, US dollar. In fact, if it breaks underneath here, then we would be in definitely a neutral to bearish posture. However, the overall trend is a bull here, so we're looking at this as a corrective break, where I think that the extreme would be somewhere in this elliptical area here, somewhere between the 65.54 and 65.21 support levels. So this is, I think, the extreme, like I said, that you'll see for a correction before we start to see the bulls resurface for the New Zealand dollar, US dollar. Reason being is that the US-China deal does benefit New Zealand. Also, the fact that this has been a raging bull, even whether the dollar index was rallying or the dollar index was breaking. So now that the dollar index looks like it's running its tide with its corrective phase, this would also coincide with a good area for the New Zealand dollar, US dollar to start to get a rally as the dollar index falls apart. So we'll see how that manifests over the next couple weeks. What we do know is that the US dollar yen, wow, this is crazy how this has sustained its trade above this initial resistance barrier here at $9.64. And we were talking with some of our friends at TFNN.com today when we did our normal Wednesday time slot that we're looking at the good 112 to 113 area on the longer term for the trend for the US dollar yen. Now, this would mean that this bull here is going to go counterintuitive to what our forecast is for the dollar index. So while the dollar index may start to see a decline, which is what we're looking for, especially against most of the major currency crosses, it's not going to be the case with the US dollar yen. I think that the one currency that the yen has, or the dollar has strength again and will maintain a bullish posture with, is the US dollar yen. I think that you're going to see this trend continue into literally the rest of the first quarter and into the second quarter, and that really gives credence to the bulls, giving them a chance to work their way higher up towards that 112, 113 area. So we have this caramel line here, which is not a line in the sand, but it definitely is our directional pivot. Now, if it falls below $9.64 and digests this recent rally, that's not bearish. All we're looking for then is for it to probably bobble around this area like it had done for the past 2 months, and then build up a base and then get ready for another run higher. Only if we fail at this $8.43 area would then we start to look to pressure this last higher move low and then take us off the bullish forecast. But like I said, whereas most of the currencies right now you're looking to see them go counter trending with the dollar index, not so with the US dollar yen. At least that's the way things are looking for the not too distant future for the next couple weeks as we head into the end of January. All right, now let's go look at Germany and the euro and see what's going on over there. So the reason we are doing the European currencies last is because we have Brexit coming up on the 31st, and we want to see what's going on. So for the euro US dollar, we have a nice rally going on today. And remember, we mentioned we still have a couple numbers for the rest of the week coming out that are going to impact Germany as well as the EU. Now, I don't think you're going to get any major shakeup with these numbers. The key pivots to look at right now are the last swing higher move high and the last higher move low. The trend is higher, fundamentally speaking. If you have higher move highs, higher move lows, remember that is the driving force of a trend, whether it's short-term or long-term. So right now the posture is in a buy-break posture. We had this higher move low set on Friday as the turmoil in the Middle East subsided, and since then we've had a nice rally. But look at the range though. Our downside pivot here is $10.83. We're trading $11.57, so we're not even a full dollar higher since Friday. So it's not much of a average true range going on in most of these days. We're looking at a 40 to 50, 60 pip extreme as far as what is going on for the bulk of trading in this currency. But today, right now, as we're talking, it seems to be pressing the bid. So this could be the beginning of a creeper rally where today we're going to start to get this momentum Tomorrow we'll probably see, like yesterday, how it came back and it played with support a little bit and then bounced right back up towards the end of the day. And then now we have the follow-through move going into today's trading, lifting the bulls up a little bit higher. And I think that, like I said, we're already at the extreme for the volatility right now. Today was $1.1118 and the high is $1.1163. That puts us at 45 pips on the day. So it still gives us about another 20 pips to go. So let's see, we're at $1.1157 right now. Then I would say maybe for today we'll give you a little price target of 11.77. That would go for 11.80 right here. So right here where this caramel line is here, I think this would be your extreme for today. And also if you look at where that comes in, well, I didn't even realize this, that's right by these topping areas. So that actually is a really good level to see. Maybe that's would be as far as we get today and come off of that. And then I think as a whole, because we're heading into Brexit going on January 31st, the likelihood is that we're going to stay in this elliptical area here and develop a range trade, but with resistance being prodded along the way. So I think your neutral to bullish forecast should maintain its posture, but remember, it might be contained more because of the Brexit date going on January 31st. So we have this week and then into next week where I think that's where you're going to see the extent of your swing, and then you're going to really start to go sideways for at least a week or the last few days going into January 31st. We'll look at the British pound real quick, and this will give you a little bit of a bearing on why this is going on. And we'll wrap it up with the Swiss, and this is why we've gone in this order today, to show you something that's really going on. If you stuck with us through this video, you're going to be really intrigued on what is going on in the marketplace right now. So we have the Brexit date marked here, and here we have our last swing high and swing low as our breakout pivots, the upside and the downside. However, since we are heading into Brexit, like I did with the euro currency, I think that you're pretty much going to be settling into a range trade with boundary. Right now, maybe taking out a little bit of support, but we'll see. Right now, it looks like it's more neutral than anything. So as this market dries up, the question is, well, Teddy, what do we trade? We know that the yen is the one that you're looking for a little direction. Australian dollar and the US dollar looking for some bounces there. The euro is kind of capped, the same with the pound going into Brexit. So what do we trade in this environment in Europe? Well, I'll tell you what you look at. You look at the Swiss franc. Look at this. The last swing high, I think this is definitely your upside directional pivot for any bullish breakout. Anything below this keeps this market in check and trading lower. Parity was rejected in a big way back here just before December, at the end of November. This slide, look at the velocity of this break right now, and today we're hammering new move lows. So whereas some of your major currencies may be slightly stronger against the dollar, helping the dollar index to pressure support, this currency for sure is helping to drive the dollar index lower. And the reason I say this is we know that there's two currencies that are flight to quality in the world. One is the US dollar, number two is the Swiss franc. Look at this velocity. Right now, the US dollar is being sold off against the Swiss franc. That is very bearish for the dollar index, and it's also very bullish for the Swiss. How bullish? Well, let's see. We have the Swiss franc US dollar like we're looking at. Look at this, new move lows. Euro Swiss franc, excuse me, there's a tongue twister. Look at this slide. This one hasn't even skipped a beat breaking since I spiked up here back in the middle of December. So for actually 1 month straight, almost every single trading day for a month has been lower. Look at this, from the last swing high. This is pretty interesting. You'll start to see what I mean with these other currencies. Okay, let's get this. I don't know why that's not working there. Oh wait, that's not what we want. Okay, so we're running in a little delay here on the stream. Sorry about that, folks. Not too clean here. All right, there we go. Okay, so here was this last swing high back in the middle of December. From that date, we have 1, 2, 3, 4, 5 positive days, with one barely being positive. It was basically unchanged. It was a doji. And then, like I said, this is an extremely hard slope to, to follow and chase. If you're not already short in this move, It's tough to sell into it, even though, like I said, we're very bearish. And buying this thing, I tell you, do not even think about becoming a bull in this market until you get a sign of a bounce. Here we have the pound Swiss. Boom, this is pounding new lows, no pun intended. It's been trading kind of neutral in a lot of the trade for the past couple months. This looks really a lot like the British pound US dollar chart. However, we are falling apart to the downside. This is definitely a breakout. It is very bearish. And where is this coming from? It's not from pound weakness. It's from Swiss franc strength. Somehow there is flight to quality going on in the Swiss franc. Here we have, just as we had the dollar exploding to new highs in the yen, look at this, the Swiss versus the yen. It's already blasted through the $1.12, $1.13 area, which we're looking for with the dollar yen, or excuse me, yes, the US dollar yen. Look at this. As we're talking right now, we are pressing new highs at 114.09, getting ready to probably even press this move up to 114.5 by the end of the week, if not, well, not today, I would say, but probably could be tomorrow or even by Friday. It's very likely that this trend will continue. And look at this, how extreme the slope is. This is crazy. The Swiss franc is being bought by against all the other major currencies globally. So what does this mean? Is it a technical driven rally? Absolutely not. The momentum of this move that's going on and the strength in the Swiss, I think is reflective of what's going on with the US dollar, that no matter what, everyone is looking for stability, and the only stability they really see, I think, in the globe right now is with Switzerland. Remember, we have the impeachment trial going on for the US president. Today, the articles of impeachment are being passed to the Senate. We'll see how that hoopla goes. We know we're in for a super circus for a few weeks to come, if not to mention a whole year to go. So that's going to impact the dollar. And I think as far as globally, where do you look to put your money right now? Well, U.S. dollar is a little shaky because of the political environment. We just came off the Middle East turmoil as well. Look at this. During that whole turmoil where the dollar and the other currencies had to get a bounce, they were selling off as the dollar rallied. The Swiss yen, it just kept going higher. That just blazing a trail higher. The British pound, it made newer move lows. The Euro Swiss, in the interim of all of that, never skipped a beat during the Middle East thing whatsoever. And that shows you a lot as far as where is the strength in the European currencies. And once again, that also gets us back to what's going on as far as where's our opportunities to trade. So our opportunities to trade right now, we're looking at following the trend of the Swiss franc strength against every currency right now, period. Right now, you're looking for the Swiss to continue to make higher move highs and higher move lows against most currencies. How long will that continue? I don't know, but one thing I can say is I have not seen a move of this magnitude and strength in any one currency except the dollar in a long time. And the fact that it's not the dollar and it's the Swiss, and there's no technical reason for this to be going on, that means that there are some fundamentals that are driving it, and the only fundamentals that really add up and make sense is that all around the world, big money is buying and putting their extra reserve assets into a flight to quality currency, and that is the Swiss franc. So global trade right now is not that the Swiss is one of the lesser major currencies. Doesn't mean that it's going to overtake the dollar as the reserve currency by any means, but it is right now in flight to quality mode. It's the only fundamental that makes any sense right now. So we'll see. We'll definitely be watching this as it happens. But I would say right now you ride the bull with the Swiss franc and look for opportunities to buy the Swiss versus other markets. And I'd be very cautious being a bear against the Swiss right now. And it doesn't matter what the dollar index is doing. So whereas the dollar index I think is going to influence, as always, the major currencies, not the Swiss. Just like with the dollar yen right now, the dollar index could be breaking. That is a bull. So those are two currencies to really watch, is the yen and the Swiss. And I think one of the reasons why is because they're politically neutral. The trade wars between U.S. and China definitely impact the Japan and the Asian markets, but they are benefiting no matter what. So I think they're just on the sidelines keeping quiet. And if you look at who's really quiet in the world, it's Japan and Switzerland. I mean, the EU obviously is dealing with the UK, vice versa, but there's no tit for tat with Switzerland. They don't really care. So I think that's what we're seeing. And that might be the trend to really be paying attention to as we head into the rest of the first quarter over the next couple months. So with that being said, I want to thank you very much. We don't have any real trading signals for you like we had over the past couple of weeks because they all hit and we had our trends, and now we're looking for, like I said, we have Brexit coming out and a couple of things that are going to dry out the major currencies. But there's always something trending somewhere and moving somewhere, so here we go. Like I said, open up your horizons and check out the Swiss franc versus other currencies and see what that how that will work out for you. As far if you're a swing trader, if you're a neutral trader or a range trader, then I think you're going to have a field day in the British pound and the euro over the next 2 weeks. And with that, I'm Teddy Keckstedt from Forex Trading Unlocked. Please subscribe to our YouTube channel and get our videos as they come out streaming live, or always you can go back and check them out at your leisure when you have the time. With that being said, have a good trading day, and we will